Hello friends, welcome to Keith's World, our online entertainment partner, and one-stop site for everything under the sky. Visit our site for live TV channels, listen to radios, download music, movies, remixes, Yahoo tools. Now you can enjoy watching online movies and live cricket streaming also. So what are you waiting for?
Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. I'm Rapstein, and here we are on Tuesday, the 12th of July, 2011. I wanted to wait till the stock market closed today to put out my update. Could have put it out at 2 o'clock today, but there's too much going on in terms of how are we going to finish. And as it turns out, we finished lower there. We're finishing with good bids in the gold and the silver market, very strong, in fact. And what's going on is pretty simple. You've got the contagion of Greece that is now spread to Italy. The financial ministers that make up the EU are getting together. There's going to be a powwow. Italy's going to have to move forward its austerity program in order to quell rumors, and so we can sell in the open market its debt. The EU ministers have to make a decision with the ECB. Are they going to allow Greece to do some structured default or not? Because I don't think anybody can pay 31, 32% and continue to survive. And I think that's common knowledge. It doesn't take a Nobel laureate to understand that. You then get to the point where today they released the FOMC minutes, and bingo, and I got to tell you, I felt vindicated. I've been telling you that I think the Fed on the table still got the thoughts of a QE3. They may not call it a QE3 because that could be political poison. But there it was. They're talking what their mandate and employment just isn't picking up enough. Whether they do it or not, the fact that it was spoken about was important today, and what it did is it helped lift the gold market. Now, the gold had a lot of things going for it. You know, it's the perfect storm for gold. I can't get away from that. And the perfect storm is you've got European problems. We cannot get our debt ceiling act together. At the last minute, the question is, does Congress get together with the president and kick the ball down the road a certain, or the pail's the right word, down the road a certain degree so that they can reach something because of election year? And I'm not talking a 90-day deal. I'm talking a 2-year deal that they may reach. That'll probably be what happens, some type of compromise at the end. But until it happens, you've got everybody on edge. So here is the gold doing what I was not thinking it would do at this time of year. I thought it would do it at the end of July. And I think you all know that I've been writing it in my market letter, that if you look at gold from the end of July through the end of December, and you throw out 1 year in the past 10 years, which year? 2008, the year that the financial worlds were melting down at that point, it has had a positive gain. Now, how much that gain will be and so on varies, but you've had lots of double digit and you've had a few single digit. The only losing year was 2008, and it wasn't a big loss. That's based on history, and I can back up what I'm saying. In the gold market, let's blow up the chart and look at this D's gold, and you could see that today, what did the market do? Well, it looks like it had an outside day. Now, what is an outside day? An outside day is when you take out a previous day's low and high. Outside day up is when you take out the low and high and close higher, and it's exactly what the market did. So, the market did several important things today. Number one, it took out a previous high when it made that lower low. It made the low first. It now is confirmed that the low today is higher than that low, and we've made the higher highs, definition of a bull trend. So now that you've got that, you start looking to see where potential support will come in. And one of the things that I look for is where the 18-day moving average of closes come in. A short-term moving average, it's really comprised of almost, if you think about it, 3.5 weeks, almost a full month's worth of data. And it is a popular study that technicians use. My concept is when the market is over that, you're looking for potential buy signals. When the market is under it, one is looking for potential sell signals. And if the market breaks down, potential support, potential resistance. Does it always work? No, but it worked here. When it fell down, it found its support in those levels. I can go on and on to make my case. It's a rule of thumb that I use. That's all that I care about. Nothing's etched in stone, I guess. In looking for other support zones, I run medium term, the 45-day average of close, and the 100. You can see together the 18 and 45, and there's a bullish lineup. It's called a crossover, which happened just a couple of days ago, right here, when the 18-day met the 45 and was able to stay over that average. It might have got under it for a day or two and then came right back. Okay, that's called bullishness. It stayed with the market. So where do you think the resistance is? You might look on the chart and you might say, it's right up here, the old high that the market had, but I run what's called a Bollinger Band, an algorithm designed to give me an idea as to where potential resistance is. And that number comes in at 1572.80. Today's high was 1576. The last we're seeing is 1570.50, and because the market, I believe, was lower than that at 12:30 Chicago time, it'll close a little lower than that. So that resistance is still staying there. And you can see where the Bollinger Band highs and lows are, and you can see previous hitting of those, what they've done. I have a lot of confidence in that as a resistance point. I then look to see where the market's at in terms of momentum. And this is an overbought market. Overbought does not mean you can't go higher. Hitting a Bollinger Band doesn't mean you can't go higher. But what they do mean is the odds of the market continuing here are falling dramatically. And I mean in terms of raw math. The odds of staying over the black line are 2.5% of the time. And the more days in a row you stay over it consecutively, that 2.5 can shrink dramatically into like 0.05 or just some number that doesn't make sense. And you can see a lot of traders, forget me, for some reason the market backs off, or when it drops down, it finds support against it. Why? Because people look at it and use the tool that way. That's all that I can tell you. The herd looks at it. Before I go on to the other charts, I want to remind you about my futures trading kit. It includes the charts you're seeing here, my twice daily updates, and it's not a CD, it's a download. We send you a link, you download it. The charting software that you're seeing right here will come up. We'll send you a passcode so you can use it. More important, you get access to my recorded webinars. They're where I sit there and review 30, 40 charts at a time, about 39 to be honest. It's an odd number, but that's about what I'll review, and it varies right in that area. And I use all the studies that I teach in my charting course, and you can see that. It is a subscriber-based edition. The only way you can get access after me giving you a free trial is if you're a subscriber. If you're not, c'est la vie. But there's a lot of work that goes in it, and I hope you give us a call to try it out. So let's go on to the silver. Silver is exciting. Silver can't push its way so far up or down. It is stuck in this elongated move. It's getting to the point where I think some people, and I'm not saying they're wrong, are probably starting to accumulate right in this 18-day average, the silver. They're saying, hey, if it gets under all this, maybe I'll throw in the towel, and it could get under that. Let's face it. If you get an economic meltdown, either silver's a precious metal or industrial metal. It can go either way. If the world saves itself, the U.S. debt ceiling gets done, and Europe magically reaches resolve, possibly over the weekend at a meeting, possibly the ECB will allow structured bailout, well, the silver market may take off at that point. You're getting to the time frame right now where I think silver moves to the upside. So I'll stick my neck out, and I am bullish on the silver market, looking for the higher prices. In the copper market has got an embedded stochastic, which is bullish. It came down today, and on its low, it did not take out the last low of 430.10. Today's low was 431.45. So, as long as you don't take out this 430.10, should you take out today's high, the odds still favor a move back up to, I know this sounds wild, 448. Remember, China's not supposed to be in the market buying this, and yet the chart is looking good. In the crude oil market, here's another market that the world told us, hey, crude oil's not going to be able to stay up. We're releasing reserves. We've got Saudi Arabia increasing production along with other OPEC countries. And the market, well, it sort of bought into that. And you did take the market down to $90, right in that area, 91. Well, suddenly you're up from there another 6-7%. 97, 92, and this is a sell-off from 99.87. You had a 10% move. It hasn't ended yet. And what's the chart pattern? It's still one of higher highs, and if you look at today's low of 94.02, it took out 94.03 by one tick. So what happens? You've just neutralized the uptrend, so I'm looking for solid resistance 99.34 and the market to rebuild in the $95 range. In other words, I don't see much going on there now. That was an interesting one-tick move. The same thing happened in OJ today. It was very fascinating. Now this chart, if I don't tell you what it is, you're going to say, well, what's going on here? It seems to be going sideways, trying to figure out which way it's going to break out of the Bollinger Band. And you're right. And this is how many ounces of silver you need to buy gold. It's the gold-silver ratio. And it's stuck here in the 40s. And it's just been going sideways for the longest period. We'll have to wait and see which way it breaks out. I don't see an edge in that in any way. Rebob gasoline, bullish. Highs that are higher than previous highs. So far, break lows that are higher than previous lows. Next resistance point, the 311 area. And this market is right here and now converting itself from being overbought to locking in an even more bullish trend. It may have another move to the upside. Why are energies moving up? Ever dawn on you that maybe people don't want to own any currency in this environment? The one thing that they want, storage of value, which is going to be gold. And what's the other potential crazy quasi-storage value? Crude oil, unless you think the whole world's going into a meltdown. Everybody needs energy. Interesting. At least that's my thought. With that, I'm Ira Epstein. See you tomorrow. Have a good trading day.